Hello everyone, it is Evan from the Trade Risk on Sunday, July 19th, here with a condensed version of the usual market recap. I'm going to spend some time analyzing the health of the market and then look at a few trade ideas heading into next week. I've been traveling for most of the weekend now. I'm a little behind schedule. I just got back. I'm catching up on things, running through my scans, and I wanted to put out a quick video. This one should be shorter than usual, just to keep you up to date with what I'm thinking about with markets and some trade ideas. Now, before we get started, I want to remind everyone, as I have been, that I am hosting a live trading webinar this Wednesday at 7:30. So it's coming up soon now. A few topics I'm going to cover: how I analyze price action, how I find my trade setups, how I position size, manage risk, and then I'll be doing some Q&A. So head here, thetraderist.com/webinar, drop your email address. Even if you cannot make this date, I will send you a recording of the event and you can replay this at your own time. So fast approaching, please sign up if that interests you. I'm looking forward to that on Wednesday. So looking at the S&P 500 for this week, the SPY ETF, you can see we had a very strong week here. We closed on the highs. Let's take a look at a weekly chart first and you can see where we're at. We successfully held support down here at 204.50 last week, and after that move, after that failed attempt to break us down here by the bears, we've had a very strong reactionary bounce higher to the top end, basically all-time highs here at SPY 212.50 or so is this resistance level that we've rolled over back in May, held as resistance in April. Then we failed again in May. So we're back at a pretty interesting inflection area. And notice though the strength and the strength on this bounce has happened pretty quick. All this week we've been heading higher. It kicked off the week on Monday with this big gap up, and if you remember, I think we were mentioning to be very careful and that higher prices were expected after seeing this close on Monday, because last week was a lot of indecision. This week we came in with a strong gap up, closed on the highs, cleared the inflection area at SPY 208, and that was a time to take notice, take shorts off the table. Even if you didn't load the boat long, I still think it was a pretty cloudy situation here on Monday, but certainly you would have wanted to at least put on a little bit of long exposure or cover that short exposure. And for the rest of the week, we basically marched higher. So the move's been strong. It looks like a lot of people are perhaps offside still here, and now that we're back near all-time highs, you could get a a very strong chase effect here if people are in fact still underinvested in this market. Now, it's not to say we're not overbought a little bit here on at least some near-term metrics. It is tough to chase, but unfortunately, it's times like these where chasing sometimes is actually the most profitable, and it pays to chase. Now, again, you need a system, you need a plan. I'm not saying just blindly buy here, but when you get an explosive move like this off of a very headline-driven market and a lot of built-up pessimism down here at these lower prices, it seemed to have effectively shaken out along a lot of the week longs and just move people to the sideline. And now that we're seeing some resolve and it's to the upside, perhaps this is going to continue. Now, if we look at other markets here, the IWM is in a similar situation here, not quite at the all-time highs yet. That would be up here at 129. It is at a pretty heavy resistance level at 126.50. This was where the market was topping off in April and May earlier of this year. But I think the real story is in the NASDAQ, especially here, the QQQ NASDAQ 100. You can see the explosive move here that this one's had, breaking out to new 52-week highs here. And if we actually look at a monthly chart, zoom out here, we are fast approaching the 2000 all-time highs here. And at this point, it looks like we're about 6% away from tagging these all-time highs. So especially with some of these big companies that make up a lot of the weighting here in this NASDAQ 100, have yet to report earnings. So those are things like Apple that still haven't reported earnings yet but are coming up soon, Facebook, Microsoft, Amazon. A lot of these companies will be reporting soon, and perhaps we're going to see some even more acceleration to the upside here, or perhaps they're getting priced in and we're overshooting now. You know, I'm not going to speculate or make a prediction one way or the other, but it is showing some extreme strength here ahead of some pretty key earnings. So the Qs are definitely leading us higher right now, especially on this weekly chart. Again, you can see this explosive candle here to these new highs. So this is something that I would not want to get in front of. We're certainly overbought here on some metrics, at least in the short term, but it's not a reason for me at least to go short this market. I think it's something that you want to continue to look for opportunity to get long it. And in fact, we are long this. We got long this on Thursday. The Qs, actually the TQQ, which is just the Ultra Pro, the triple levered ETF that tracks the NASDAQ 100. So that's where my money is placed right now. We'll be looking to take some profits in that if we do see some further gains next week. Otherwise, I really like this market. I think this is certainly where the strength is, and it's tough to fight this market when you have indices and names like we saw this week with Google, Netflix, all of these explosive moves that we've seen recently breaking to new all-time highs. So that's where we stand on the market. I think we are very bullish here, but perhaps we could use a little bit of rest before we continue higher. Now, some names going forward into this week. I only have 3 of them that I'm looking at because I haven't finished all my scans. The first is BMS. This one's a little bit of a boring name, but it's got a pretty clean pattern here, especially on that weekly chart. $47.30 or so has been resistance now. Let's see if it can take it out here. If you look at a weekly chart, you can see it's had a nice push higher here throughout 2015. It's moved sideways. See if that one can continue. And in the same space, BERY is another name that has some pretty well-defined resistance right here, right around 34.20. Look at a weekly chart. You can see it's pulled off a little bit over the recent weeks. So look for this one to get going again above 34.20. And then finally, something a little more volatile and interesting is Box. And I don't think this one's ready just yet, but if you look at a weekly chart, you can see what I'm looking at here. Since its IPO, it's basically failed to make new highs right out of the gate, and then it's basically pushed sideways for the last 7 months or so. So this one is very volatile. Let's see if we can get a close above 1940 and leave all of this this previous supply here in the past, and I think this one gets very interesting if we can see some continuation above 1940, 1950. I'm not sure when they report earnings, so you want to keep that one on watch. And this one, given the volatility, got to give this one some room if you're going to try and trade it. I know we tried to play a breakout here on this candle here, I believe at the end of June, and we were stopped out of it. So look to take another shot on the long side if we see a little more strength in Box. I think that one shapes up to be pretty interesting. And that's it. That's all I have for today. So thanks for watching this quick version of the recap. Again, check out the thetraders.com/webinar. Sign up for Wednesday's event. Even if you can't make it, I'll send you a recording. And that's about it. So thanks for watching, and I will catch you next time.